Hi, everybody. It's Tuesday, March 11th, and the market continues to go down. I use Elliott Wave. Elliott Wave is a great technique that will help you make a lot of money in the stock market, but it has limitations. And it is important for people to realize that it has limitations and that anybody who is using Elliott Wave and is giving you targets or saying it's going to go lower or whatever, they don't know. Nobody knows what the market is going to do next. Here's what we did know. Here's what we did know over the last few weeks, okay? Here are the definites. So if you go back to the daily chart, we had this correction and we were all convinced this was a fourth wave and that this move up was going to be a move up to 6,300. I was thinking 6,300 to 6,500, but it never did that. We stopped at 6,150. And not only did we stop, but we got this nasty little thing that I have pointed out so many times. This was, in my view, a triangle, right? This was a triangle, and it was a big red flag that we were actually in a flat, right? So once we broke out of this triangle to the upside, it was like red signs, red flags everywhere. Get out, get out, get out, get out, get out, get out. So this was very, very bad. And if you and in my video from February something, or whether it was like 19th or something, I said, yeah, you can take puts here because this looks like a flat with a target of this low basically, or cover your shorts or cover your puts at 800 just to be on the safe side, because flats can be, they can stop a little early or go a little lower, right? So that's what so yes, if you had taken puts here, right, when this was apparently a triangle, clearly a triangle, if you had taken your puts or established your short, there was actually a perfect spot to establish a short, and that's when it broke 6,120. And I said that in a video. I said if it goes down, if it does not go straight up and actually starts to tank, there is a good 2-hour time period where you had plenty of opportunity to establish shorts and take out puts. So yes, let's say from 6,120 all the way to 800, that was a safe bet. That was 100% a safe bet short. I had continued to say that the ultimate low would be 680, and we blew past that. But there comes a point when you have to cover your shorts, because we live in a world where the Federal Reserve is pumping liquidity into the markets, and when you short the market, the Federal Reserve can come in and dump a bunch of liquidity into the market, and even though you were 100% convinced it would go all the way down, it goes straight up, right? So that's why you can never ever hold your shorts all the way down, unless you have a stop. I mean, unless you're okay putting like a really high stop at exactly where you bought it and losing all of your profit. I'm not. So yeah, then you can try to make it all the way down. I don't do that though. I like to take what I know is going to happen, and I knew we were going to 5,800, and I strongly suspected that 5,700 to 5,680 would be the bottom. So that's what I knew, so I took the money that I knew. Now I am telling you in this video right now that I don't know. We have broken 680. We broke the low from yesterday. We went all the way to 5,500. I don't know. I can think that this is 1, 2, 1, 2, 3, 4, 5, 4, 5, and we have one more low. And I'm going to pause this video. Okay, so here's the deal. We have this downtrend channel, right? Either we are done and we are going up. The puts and the calls for this week, the puts and the calls suggest that we close the week at 800, 5,800, right? But that put and call data changes constantly. It constantly changes. I prefer to look at only the daily put call data when it comes out just 1 or 2 hours before the market opens. But yes, we could. So if this is 1, 2, 1, 2, 3, 4, 5, and maybe there's a fourth wave hidden around here, 5, then we can go straight up. Okay. Or it's 1, 2, 1, 2, 3, 4, 5, 4 will go up to 700 today, and then we will swan dive back down to hit 500, right? 55500, right? Those are the two options. I have no clue which it will be. I'm not even going to bother trying to figure out which one it will be. Um, uh, yeah. So we don't know. And then we have a new problem. And let's go to the daily chart to look at this is the daily chart. Okay, we even maybe need to go to the weekly chart now. The weekly chart is saying that maybe this isn't a fourth wave. So A, B, C, and up. But I don't know about, I'm sure that you guys are looking at this chart right now and going, ugh, if we hit 5500, like if we go up to 700 today, right? Let's say today we go up to 5700, we are rejected at 5700, we will go swan dive back down to 5500. I don't think we can call this a fourth wave anymore, which means that we are in a wave 2, which means this will go to 5500, it will go up, and then we will swan dive 5 more waves down. All right. And that is a very big concern. So this could actually be what actually happens over the next few weeks. All right. Especially if So today, Tuesday, March 11th, we go up. We test 5700. If we fail at 5700 and swan dive down, we will most likely hit 5500. Okay? And then I will no longer call this a fourth wave. I will no longer call this a fourth wave, and I will say that we are now in a wave 2 of a much bigger, multi-week, several month long correction. Okay? And that's just the reality of where we are. Now let's look at something happy. Okay, so one of my favorite stocks is the Hershey's Company. It's not my favorite stock because it's made me a lot of money. It's my favorite stock because I buy, when I'm in the United States, a lot of Hershey's candy. So look at this. Hershey's, for some reason, I don't know if this is historical or not, but it goes up when the market goes down. And look at this. Since the beginning of February, Hershey's has just been on a beautiful run. Oh, it's so pretty. So actually, I haven't been panicking like a lot of other traders over the last few weeks because I've been hanging out with Hershey's. So I had nothing to panic over. We hit 193 yesterday, and I bought in at 170. So I'm a happy girl, and I love Hershey's. And this is also why I'm not trading on margin, and looking past the big tech stocks, looking past the big, Twitter meme stocks can sometimes really be helpful. So I'm very happy. So yeah, my Tesla position has been slaughtered, as most people's, but my Hershey's position has been a bright spot in my day. Very happy. I really do hope it takes out this high again. If the market goes down one more time, we will. So hopefully it will, but I will probably get out very soon. If Hershey's takes out 207 here, then I think on the weekly chart. So if it takes out 207 to 212, we may actually have a run up to new highs on Hershey's. We could go up to 300 on Hershey's. So this is this is beautiful stock. Very happy. No complaints. So there you go. M is another one that I bought on Friday. Friday was looking like it was the bottom because we were in that 700 to 680 range, and I bought M. And even though the market continued to go down, a lot of these retail stocks have actually been very, very steady. So M is one of them. So even though I bought too early based upon the overall indices, for this stock, I'm fine. I'm still totally fine. So I'm feeling good. I would actually like to sell at 16 or 18. So those are my two goals. I try only to get 10 to 20% per stock before I start thinking about taking profits. And then I just buy it back, right? So we'll just watch this. And if I get 16 soon, I might just take it. I might just take it. But 16 and 18 are my two. And then, of course, if you were a long term holder, you can hold into the 20s. I still believe that M is going to go back up into this area here, like to 24. So here's Tesla. I had a friend who tried to warn me about Tesla. He said that people weren't buying the cars because of the politics. And I kind of poo pooed him and I didn't quite listen to him. He also warned me of recession talk, and I also didn't listen to him there. So he is actually more right than me. And if he's listening to this video, I apologize for not taking him more seriously. But let me explain my logic for why I am not that concerned about Tesla. Elon Musk is just the jumping monkey for Tesla. I really have no idea what Elon Musk's role is. He's a PR guy, and he's not an engineer, so I really don't consider him to be in charge of Tesla. If he was a solid engineer, then I would have more respect. But between impregnating women and having sex with women and all the things that he does, there's really no time for him to run Tesla. So it's really the engineers that are running Tesla. Furthermore, I don't consider Tesla a car company. I consider Tesla to be a defense contractor. And many years ago, I did a lot of research into Tesla, all of 5 minutes of Googling, and I realized that Tesla was basically funded by government money. And that just was a big red flag for me, because that was like, okay, this is not a car company. This is clearly another extension of the US government, and probably with defense. And so that's why when people tell me, oh, people aren't going to buy Teslas because of their politics, because of Elon Musk's politics, I'm like, okay, well, it never was a car company. If you think Tesla was a car company, you don't understand how the US works. Tesla is some type of defense contractor for the US government, and I don't really even know what they do. So a little bit of background about me is I have worked in engineering, and I worked for a company that had nothing on the outside. Looking in, for investors looking in, no one would ever know that my company that I worked for had anything to do with the US government. But actually, most of the money that we were earning were from black projects. And I don't even know the projects that I did work on, because I didn't have a security clearance at the time. So I can't tell you anything, because I don't know. It was all kept in the dark, and the people who knew, and the people who didn't know. But we had a public business, right? We had the main public business, but then there was a lot of money coming in the background with government defense contracts. So we were also a defense contractor. And I think Tesla's the same thing. It's a defense contractor. So maybe ending the war in Ukraine is actually bad for Tesla, since it's a defense contractor. So we will just have to see. But using Elliott Wave and looking at Tesla, the interesting thing about Tesla is this is A, B, and C. Okay? This is A, B, and C. There's hope, guys. There's hope that this is just a correction, and that when this correction is over, we go straight up. So I know it looks really bad, but there's three waves here. I'm an Elliott waver. I can be wrong. But this area here has three waves. And when you see something that begins with three waves, then everything that comes after it is part of the correction. And it looks really bad, I admit it, but it's clearly not a wave four. We were all thinking that it was a wave four, but it actually could be a wave two. And if we stop and if we hold 200, and then go straight up, this could actually theoretically be a wave two. It could fry the shorts, and we could end up getting to 750. I mean, I know it looks really bad now, but this could actually be quite bullish. It sounds insane. I know, but because this section here is only three waves, this can actually be super bullish, you guys. It really can. Of course, you don't, if you own Tesla, don't buy more. Don't buy more. If you want to gamble and you don't own Tesla, or you have money just to gamble with, you could try getting it, you know, at 200 if it goes down to 200. Um, but yeah, I mean, this is reality. It looks bad, but it actually could end up being quite good. So I'm holding my Tesla position. I'm not adding to my position. I'm adding other stocks that I love. And I'm just going to wait because this could just be a correction. This is actually the monthly chart, and it doesn't look very good, but it looks like this. Let's say worst case scenario is that this is wave three, then this is all wave four, and then this spike here was wave five. Then it means we're doing A, B, C down for wave two. Wave two can pretty much end anywhere. It can end here and go up. It can even go back. We can go back to $100, right? We could actually go back to $100. But then it's still a wave two, right? It's still a wave two, which means that the wave three will come, and wave three will come. We'll take this thing to $1,000, guys. I'm telling you, if Tesla doesn't disappear, if Tesla does not disappear, then in 5 years from now, this will be like $1,000. At the end of the Trump term, Tesla will be $1,000. I call it right now.